Hello, and welcome to Corporate Insight's ETF Website Positioning and Resources webcast, where I'll be diving into how asset managers highlight their ETF suites and support advisors' research into the investment vehicle. My name is Deirdre Kelshaw, and I'm an analyst here at Corporate Insight. And with that, let's get started. First, a little bit about Corporate Insight. For almost 35 years, CI has provided actionable, competitive intelligence and customer experience analysis to leading financial services, insurance, and healthcare firms. On the slide, you can see the 4 high-level core offerings we have available. All of our services help clients track and analyze industry trends, understand changing customer, member, and patient behavior, maximize competitive advantages, and improve prospect and member journeys. Our Monitor service is a subscription-based research service that focuses on the end-to-end experience of customers and prospects. We offer Monitor services in 22 verticals, from brokerage and banking to insurance and healthcare. In our experience benchmarks, we provide customized benchmarking analysis against your competitors to help you uncover key improvement opportunities. We also offer consulting services, leveraging benchmarking, quantitative and survey work, and qualitative research to address your specific needs. We also offer UX research through an expert team that conducts user testing to help identify key customer needs and pain points. Learn more about all of our services at corporateinsight.com. Today, I will discuss a recent report from our Asset Management Monitor that specifically monitors the user experience from the perspective of financial advisors. On this slide, you can see our research methodology for this report, which highlights our main focus areas. Some aspects we explored include the availability of promotional ETF content and its location on firm websites, as well as the kinds of resources available to advisors as they conduct relevant investment research. We also explored the benefits of ETFs that firms highlight across such content and evaluate the product suite's overall positioning, looking at how this reflects firms' overarching business strategies. Now let's take a look at the 4 key findings that we've identified in our research. As you can see, our first key finding highlights how firms most often position their ETFs as expert-backed investment options that benefit from active management experience. A recent Broadridge survey shows a 25% increase in ETF portfolio allocations over the last 2 years, a trend that advisors anticipate will continue, with actively managed mutual funds serving as the primary source from which advisors plan to reallocate into ETFs. To meet this demand, firms will not only have to adapt their product lineups, but promote them accordingly based on their individual business strategies. Interestingly, even for passive ETF strategies, firms in our report call attention to their years of active management experience to maintain advisors' trust in these offerings. Even though passive ETFs track an index, by positioning active management as an important aspect of the vehicle type, firms can highlight the research and insights of professionals that inform the construction of their lineup, which can help reassure advisors and clients who may be hesitant to invest with them. Of course, though, expertise in management strategies play an even more significant role in active ETF promotions. Franklin Templeton, for example, broadly showcases its expertise throughout several locations on its ETFs by Franklin Templeton page, which you can see on the right, noting its global AUM and ETF suite size. The firm dives deeper into the benefits of firm expertise on its Go Active with Franklin Templeton ETFs page, where it highlights how advisors can combine the firm's expertise with the benefits of an ETF structure. Here, the firm also draws on its more than 75 years of experience in delivering active solutions and its research-driven insights. Many firms also discuss the unique benefits of ETFs within their positioning to help advisors differentiate the vehicle type from other products. As you can see on this slide, most firms highlight low cost and tax efficiency as advantages of investing in ETFs, likely doing so to attract a wide range of advisors whose clients prioritize affordability. Firms promote additional benefits like transparency and flexibility to demonstrate which characteristics distinguish ETFs from other product options without directly positioning them as an alternative to mutual funds. Several other types of benefits are highlighted, but at a smaller rate. For example, some firms emphasize diversification as a benefit of ETFs, which in turn can help reduce risk in investors' portfolios. While BlackRock consistently highlights ETF's low costs, it stands out for offering dedicated pages for each type of ETF that it offers, which allows it to showcase the specific benefits associated with each category. For example, the iShares Outcome ETFs page, which you can see on the right of this slide, overviews goal-specific benefits, highlighting the unique advantages of that type of ETF in addition to the general benefits of the vehicle, which advisors likely have at least a basic understanding of. Our next finding is about product positioning in relation to practice management. Our March 2024 report found that firms most commonly associate practice management-related benefits with model portfolios. However, in the report that we're talking about today, we found that a small amount of coverage set firms apply similar positioning to ETFs. Specifically with active ETFs, firms establish the vehicle type as a way to draw from their expertise in managerial involvement and save advisors time that they could be using to conduct other business-related tasks, like strengthening client relationships. This positioning is not necessarily exclusive to active ETFs, however, as firms like iShares center their positioning around firm research and how it relates to indexing. Invesco stands out for encouraging advisors to let BulletShares ETFs do the work for you on its BulletShares Fixed Income ETFs page, which you can see on the right. The firm promotes this specific ETF category as an attractive option for advisors whose clients may benefit from bond attributes but wish to spend less time on bond management. Although not explicitly stated, this positioning suggests that advisors can spend their extra time on things like business building or client relationships if they choose. Lastly, we found that firms typically include thought leadership on ETF-related pages to boast their expertise on the vehicle type and supplement advisors' research. Firms establish this resource type as an industry standard, with almost all coverage set firms providing timely insights about the product. A little less than half of the coverage set takes us a step further by offering a dedicated ETF insight page where advisors can view all relevant commentaries from a centralized location. Firms, however, don't seem to offer other types of educational resources as support, often lacking ETF filters on insight hubs, ETF-specific subscription services, or dedicated ETF education pages. AllianceBernstein stands out by offering a dedicated ETF Insights page to demonstrate the depth of its knowledge on the vehicle type and help educate advisors on relevant topics. It also promotes an ETF-specific subscription option across ETF informational pages to encourage further engagement with its insights through regular communications. The image on the right shows a promotion for this subscription service on the active ETFs page. To summarize, as ETFs grow in popularity, firms are finding ways to differentiate themselves in a competitive market. In their website positioning, coverage set firms focus on traditional benefits associated with ETFs, like low cost and tax efficiency, while emphasizing traits unique to their business, such as their expertise and management style. Some firms go beyond product characteristics in their promotions, appealing uniquely to advisors by positioning practice management as a benefit of ETFs. Lastly, available resources vary heavily across firms, but thought leadership remains the most common type across the coverage set, with few firms offering additional educational resources to kickstart conversations between investors and advisors about potential fund options. To end, I want to share our previous and upcoming Asset Management Monitor Advisor reports. In the past, we've offered in-depth research on topics like investment capability pages and focused on the positioning of other specific product types like model portfolios. Later this year, you can expect to see other interesting reports, such as one centered around advisor perspectives on client relationships, which will share findings from in-depth interviews and UX testing that we've conducted in-house. Here you can find our contact information. If you would like any further details about our services, please visit our website at corporateinsight.com, or you can connect with us using the email address on this slide. Thank you for watching.